Hi, this is Mohan Kumar from Rainy Bulls, and I welcome you to another episode of Nifty chart analysis using my favorite Triple Threat Intraday Strategy. And in this video, let's look at today's Nifty chart, that is from May 3rd, 2023, and see what kind of entry and exit signals the strategy would have given us. So let's have a quick look at the charts. Great. You're looking at the two-view chart on the trading view platform. So we have the Nifty spot on the left and Nifty futures chart on the right. And both these charts are set to be on a 3-minute time frame. So before I bring the indicators on, right, let's look at today's price action and see what kind of, market price behaviors, it has exhibited. So the market actually, gap opened. So it's a huge gap open on the downside, as you could see, and post the gap open, right? The market swiftly reversed, right, and to higher levels, and from that point onwards, it again actually, fell sharply back down to the day's low, right, almost close to the day's low. Then actually it moved back again, right? It's kind of forming um, a lower high pattern, right? And again, market swiftly moved down to the day's low, right? This time it even tested the day's low and quickly reversed back again to the previous high point, and then actually it closed almost, at the same level as of the open. Okay, so this is today's price action. It looks quite interesting, isn't it? Especially for day trading, there are a lot of moves that we could have actually, capitalized on. So now let's try to bring the custom indicators on. By the way, these custom indicators are the core or the heart of the triple threat intraday strategy. The reason why I call as triple threat is because I use these three indicators, which in turn is going to actually, give us three conditions to enter and exit every single trade that we get into. Okay, the first indicator is the price levels indicator, or the locations is what I would call in simple terms, right? Locations, again, I've discussed enough about these three custom indicators, which have been built exclusively to be used on the Nifty charts on a 3-minute time frame. Again, these indicators are not available out of the box in any of the charting platforms. It has been built, using the. I think, maybe I've talked enough about these indicators. Like the market participation is, again, it is represented by these dots, right? And again, the trend meter is actually, it's built on top of stochastics, but it's not the regular out of the box stochastics, right? And this has been all these three indicators have been tested thoroughly. It's for long many years. Has been it has been They have been back tested, right? And they have been optimized and fine tuned to give better results. So what you're looking at right now is the end outcome or the end result of 10 years of my hard work, right? So every single, even for example, let's take these moving averages, the kind of parameters and settings, that goes behind these moving averages are like based on the study for the last so many years, right? What works best, on a daily time frame, like 3 minutes time frame. So I've used multiple time frames like 1 minute, 2 minutes, 3 minutes, 5 minutes, and finally, 3 minutes is the time frame which works well with all these indicators to the parameters which they have been set to. Okay, so with these indicators now brought on, now you would see a clear picture as to why the market swiftly moved from the bottom to the top, and why the market actually, fell sharp from the top to the bottom again, right? So you could very clearly see based on the locations. Like I said, these three indicators again gives us three conditions to enter and exit. The first condition is being the location, the second condition being the market participation, and the third condition being the trend. All right, so now let's look at the same, the chart. Okay, these two charts, right, with the indicators now applied on. Now the price action looks like this. The price opened way below the previous day's low, as you could see, and the price took support at the daily support, the green line, right here, and the price swiftly moved back again. So as you could see, the price is taking a kind of a strong resistance at the black moving average, right? So for the first 30 to 45 minutes, we do not enter into any trades, right? that's the rule, because we need to observe the market's price action before we could actually decide which direction we will have to put our money into, right? So in this case, around 10 o'clock, you could see the price, post the gap down open, it moved towards the green moving average. If the price would have retraced back down to the support level, and if it would have taken some kind of support here, right, while the trend meter is back into the green zone, then we would have entered into a long position right here. But the price actually reversed, and it appears to be a strong move from this support level, right? It moved into the moving average, right? And as you can see, the trend meter is strongly raising from the bottom. So we could have taken a trade here. However, it is not a high probability setup because you have this daily low, previous day's low, right, which could act as a strong resistance. And besides, you also have the moving averages which are sliding down. So it needs a stronger force for the price to steer through all these levels. And even if it does, right, now this is not the setup that we want to get into, right? Like I said, we need to have a clear confirmation. We need to stick to the plan, and we need to trade as per the plan. So there is no trade right here. So we just need to wait and see what the price does when it approaches to the previous day's low. As you could see, it steered through that, and it actually moved further into the moving average band, and it kind of took a great resistance. It's seeing a great resistance of the black moving average. And on this particular chart, it's back to the previous day's low, and it's a very strong location, the black moving average and the previous day's low. It's a confluence of multiple locations. And look at the trend meter, it's back into the red zone. So it's a strong confirmation that the price is seeing some good resistance. And looking at the kind of participation we have at this point, now this is where we would plan to take a short position. So when the price retraces back to the blue moving average, we look at the price action, right? And when the price came down to this, the previous day's low on this particular chart, right? You do not see any kind of a reaction. Like there's no participation, there's no volume that's coming in for the price to move higher from these levels, right? From these levels. And besides, you could see that there is a participation right here on this particular candle, and this particular candle, if the low is broken, now that is where we get into positions. So now our entry is going to be right at this candle, right? This is our candle, right? On this particular chart, it's very clear. This particular candle, right? It tried to actually retrace back to the moving average and move up again, but it did not have enough, participation from the market, and there is not much of a volume as well. So the price actually, is trying to move further down. So this is a very good setup, a high probability setup, because you do not have any kind of support until these levels, right? And this is the high of this candle is a stop loss, the low of this candle is our entry, and you stay into the trade as long as the price reaches to the green zone. The trend meter gets into the green zone, right? So this is exactly the place where you would take your profits. So it's a wonderful trade, your first trade. You risk one candle, and look at the kind of reward you would get, right? So let me quickly show the kind of rewards that you would actually get out of this trade. So we're getting to a short position, and this is going to be our candle, right? So now this is going to be our candle, and so I'm going to actually quickly show you the kind of rewards that we would have out of this particular. Uh, okay, so you could see the stop loss is at 7.65 points, right? And the target is 35 points. So it's roughly about 1:5 times. So that's the kind of reward we are looking at. So every single trade, the risk is going to be very, very low, right? But the reward is going to be like multi-fold, like 1:3 is minimum is what we would actually look for. And that is what we would call it as a high probability setup. So you risk 7 to 8 points on this particular trade, and you get 35 to 36 points, right? So that's exactly the kind of reward we're looking at. So it's a wonderful trade, the first trade. It went in our favor, and we were not surprised because we know for a fact it's a gap down open. So we talk about all these price action patterns based on the open, whether it is a flat open or a gap open. If it is a gap open, whether it is a gap up or a gap down. So post the gap open, whether the price moved in favor of the gap open or against the gap open, right? So we have a lot of price action patterns exclusively defined to work on this Nifty chart on a 3 minute time frame. And in conjunction to these indicators is what, the confluence of all these, it triggers, entries and exits, right? These are all the important patterns and analysis that will be discussed in the webinar. It'll be a very structured content, so you would understand based on the opening, based on the first 30 to 45 minutes of price action, you would have a clear view of what the market is about to do. And you would not actually, take trades with a guess. You don't expect, you don't anticipate, but rather you trade based on facts. Okay, so it's a very good example. The first trade went in our favor. It was a 1:5, risk to reward. And look at the price action post that, right? So the price actually kind of, the trend meter moved into the green zone, right? And the price actually, look at the kind of participation that you have. Let me kind of delete this particular, you know, the risk and reward. You could look at the participation right here, right? There's a huge participation, so which means the price could actually, move swiftly upwards or downwards from here. Look at the price actions. The 10 meter is into the oversold region. So looking at the price action, the price is trying to move higher, but we don't get into a trade right here because the look at the moving averages, they're all sloping down, and the price is way below all three moving averages. So we wait for the price to retrace back to the moving average. So the price is at a daily support. It's almost close to the day's low. The price is retracing back into the moving averages, and it's back into the same low point, right? To the previous low point, which had a lot of participation. So you kind of actually, draw a line so that now it's like, forming a double bottom, right? Post the retracement, the price moved back again with a lot of participation. Look at the trend meter. These are all signals which now gives us a clear view as to which side the market is headed towards, right? Now in this case as well, the trend meter is almost close to the green zone, and this one, it's actually showing kind of like, the price made kind of a double bottom, but the trend meter is showing a higher low, right? So it's kind of, there is a conflict. Now there is a participation as well. As you can see, there is a participation here on both of these charts. So this big candle right here is going to be our entry candle, and the low of this candle is going to be a stop loss, right? And it's not, the reward might not be great because we know the target is going to be the black moving average, right? Looking at the price action, so we are going to exit around the black moving average. So if you look at the risk to reward in this particular, it's a long position, so we're going to use this particular candle, right? So the low of this particular candle is going to be our stop loss, right? And if you look at the risk to reward, so it's going to be roughly about 9 points, and the reward is going to be about 18 points, right? As you could see, it's going to be about 18 points. So it is just about 1:2 ratio. It's not a high probability setup, but again, right, it's a low probability setup. You could actually, take this trade, considering the facts, considering, all these, location, participation, and the trend. You could actually go for this particular trade, but it's not the actual or the main trade, because looking at the trend, it's moving, it's sloping down. So we know for a fact it's going to go back based on all these price action. But anyways, this particular trade is optional. But we know, like, once the price moves in back into the moving average, the black moving average, look at the price action, right? The price swiftly moved back again, right? It moved back again, and look at the kind of participation you get around these area, and look at the trend meter. Okay, look at the participation right here. You have major stakeholders getting into the market, like the green dot, which is a very rare participant, right? You could see that at this crucial level where the moving average is sliding down, and the kind of, the price action actually, it moved to the black moving average, it retraced back again, and it moved right again back to the top with a lot of participation coming in. Look at the trend meter. It's already indicating that the trend is kind of like, it's weakening its momentum on the higher side, and the current day's trend is also is post a gap down. It's making, a higher lower highs, right? Lower highs. So it's a wonderful setup again, right? So let me quickly remove a couple of drawings here, so you will be able to see, the kind of candle that we will be getting into. So this particular candle, right, which has this participation right here, you could see the volume with the participation right here as well. So this is going to be our candle for the short position. So right, this is exactly how we identify trades. So this is going to be our entry. This is going to be right and right here. Look at this reward. Now we know when we are going to enter into a trade here, we know this is going to be our first target. And if the price is going to stall or pause around this region, now we're going to take targets. But in this case, the price swiftly moved below this particular point, right? Um, excuse me. Swiftly moved, and look at the kind of rewards. So the stop loss, we are risking 13 points, but we actually made 49 points, right? That's the target we would have achieved. So it's more than 1:3. It's close to, 1:4, right? It's close to 1:4. That's the kind of reward we're looking at. So this is one of the this is actually the trade of the day, I would call. The best trade. We followed our strategy to the dot, right? We look for our entry conditions, location, participation, and the trend meter, and boom. So we captured this wonderful trade. So let me actually clear this particular risk to reward. And so we have taken, two good trades for the day, right? So we captured this one right here, which is about 1:3, 1:4, right? And we captured this one, which is about 1:4, 1:5. So these two good trades, and this one was an optional trade. So three trades, and we just followed our strategy. In all these three cases, the risk was just one candle, right? In this case, it was this candle. In this case, it was this candle right here, and in this case, it was this candle right here. And look at the location, the participation, right, and the trend meter. Okay, location, right, participation, the dots as represented on these two charts, and the trend meter. Again, location, participation, and the trend meter, right? Beautiful three trades. Now, post this, the price swiftly moved back below the current day's low, right? It was a sharp fall, and it is at a key location, right? It is at a key location, no doubt. There's a lot of participation coming in. Look at the trend meter; it is back into the green zone, even though this chart is not. This is, but do we get into a trade right here? No. That's aggressive, and I'm not an aggressive trader. I trade a little. I'm just a little conservative. I don't get jump into trades, before I get a second confirmation. So I always wait for the price to retrace back to the moving average. Come as close to the low point, right? So if this price would have retraced back and moved back here around these levels, right? And if the trend meter also has, slid down to these levels right here, right, kind of forming again a kind of a double bottom pattern, I would have entered, right? But in this case, the price moved swiftly, and it actually retraced not so low, but no, retraced just, halfway below, and then it moved back into the moving average. So these moves, even though, it's okay to actually, get into trades based on this price action, I normally wouldn't, because looking at the price action for the entire day, where the moving averages are sliding down and the price is kind of making, lower highs, right? So I would not get into a trade anticipating the price to steer through all these moving averages. So this trade is something which I wouldn't have taken, because if I would have taken this, maybe, it could have been a gamble, right? I could have been lucky this time, but not every time I would get into a trade where I'm lucky like this one. So I did not get into this one. So I'm okay with these three trades. I'm okay to let this one go off, right? I'm not worried about it. So this exactly is how, we read the charts. We look at the price action. We have three super indicators that's going to give us signals in conjunction with the price action pattern, the candlestick pattern, right? The moving averages, the opening analysis, all this put together, we have a very clear view as to what the market is about to do, and we trade based on facts, and we know for sure that the risk is going to be just one candle and the reward is going to be multi-fold. So the minimum reward for a high probability setup is going to be 1 is to 3. Anything lower, it's going to be a low probability setup. Like 1 is to 2 is the minimum that we would look at. That's going to be a low probability setup. But having said that, we always get to see one or two high probability setup on a daily basis with this particular strategy. So if you really like the content, please do like this video and subscribe to this channel to get timely notifications on the videos I upload. And I have a beautiful course that I've formulated, targeting beginners and the experienced traders, and the course is all about the strategy. The course is all about these custom indicators, how they are to be used, how they are to be read in conjunction with the price action pattern. So the entire course is with a perspective of trading on this particular Nifty chart on a 3-minute time frame. It's not generalized content. It's not going to be a generalized topic. It's all going to be around this particular strategy. What is required for the strategy is what we're going to discuss in that particular course. It's called the Triple Threat Intraday course, right? And so if you're interested, please do drop a message to this WhatsApp number or to my email ID, right, to get to know about the details of this course. You could also, get to see the topics covered in the course and the information about the course, on the videos which I have posted earlier. So until I get back to you with another video, it's bye from me and take care of you and your loved ones. Thank you for your time and patience. Bye bye.